Hey, this is Jim Malone coming to you live on TikTok. I'm also on YouTube at youtube.com/DallasTradingFloor. I'm on Facebook Live at facebook.com/DallasTradingFloor. I'm also on Twitch at Twitch TV dot slash Dallas Trading Floor. And most importantly, I am on YouTube at youtube.com/Dallas Trading Floor. Well, here we are. We're back. I'm back today. I have a very interesting, by the way, for everybody out there, I have what they call action trade alerts, and they are basically available at any time. I just put out a very interesting action trade alerts on the Iron Condor trade that I just placed right before I came on the air here, and I'm going to go through it with you on the slides. I'm also going to include the URL so you can just type it in and see what I'm talking about. But I also sent this out on my action trade alerts, and they're available. They're totally free. All you have to do to get that is to go to Dallas Trading Floor and just put in your name and go from there. It's free, and a lot of people are taking advantage of it. And I hope I can see you there, because what we do is every time I go with a trade, I basically put it out and then I send it out to everybody that's on the list. And also I do other stuff as well. So again, I'm on. It's available totally free. Dallas Trading Floor. So okay, let's go over and take a look to see kind of what's happening on on the screen here. So let's see. I've got to go ahead and share my screen. Wow, I didn't do this when I started, so you're going to get to see all the behind the scenes here. There we go. And let's see. I got on a little bit early here, so let me see if I can put this up as well. Oh, there we go. Okay, I've got to go ahead and make that happen as well. So let's see. Yeah. Not allowing that very much. Okay, here we go. Let's see. Bring it over here and see if we can get another screen up here. Okay. Well, I thought I was going to be able to do it, but apparently not. So I don't have another screen. So let me see if I can pull it up on the other screen. Yeah, maybe there. Oh, if I, it won't let me do it. Oh, there's something I don't know here. Okay, well, I may have to do it without charts. That would suck. Okay. All right, share screen. Um, okay, well, I'll just have to share this screen. Share the screen. Share. Wow, look at that. look at that. That's pretty cool. Okay. Well, There, I'm back. sorry about all that. Golly, I tell you, I'm getting better technically, but I'm still not there. So I want to give you kind of an update of kind of where we're at in the market. Sorry about that. Basically, it's interesting. The market is in confirmed uptrend. We have nice movement. It's 10 over the 10 500 on the Nasdaq. All the major indices are up. The S&P is up. The Dow Jones is up. So let's take a look at the spider real quick. This is the largest ETF, by the way, in the world, and many people have their retirement in the spider. So I'm just going to kind of show you kind of the way it looks right now. And I'm going to basically, this is the 40-day moving average. It's above that. It's taken a turn for the upper. So it does look good. I mean, it seems like we're seeing some nice movement up. So that's a very, very encouraging sign that is indeed happening. Definitely like to see that on the spider. So it looks as if it was going to kind of it's been sort of in this tight pattern here, and it seems to be moving higher. So that's a very good sign. By the way, on the charts that I'm going to show you, there is what they call the relative strength line, and this line basically compares the stock to the S&P 500. I'll show you that in just a second, but I want to show you the next chart, of course, is the diamond, and this is the Dow Jones. This is the ETF that covers the Dow Jones. And by the way, the Dow Jones is less important index than it used to be. It's only about 30 stocks. And as you can see, it is up too. So very, very good. We seem to be moving in the right direction. And of course, the most important of all of the stocks is the largest growth index. And that, of course, is the QQQ, which is the Nasdaq 100. And that is bounced, and it looks like it's moving up as well. It's up $3.47, and this is a live chart. So that indeed is a very, very good thing that's happening there. Just for everybody, I just wanted to get into really quickly into an options play that I'm making currently on Apple, and this came out in the trade alerts, but I want to kind of show you this. And this is basically an options play on the on earnings for Apple. And here's how it kind of works. This is what they call an iron condor, and an iron condor is an options. It's a four-legged animal. This is a four-legged trade in which we do a bull call. We do a bear call spread and a bear put spread and a bull call spread at the same time. And basically what happens with this is that if the stock is relatively stable, and typically Apple is relatively stable, I do expect the Apple share price to drop slightly when it comes to earnings. Typically what will happen is before earnings, you will see a stock bid up, and that's indeed what's happening with Apple right now. And I'll show you that on the chart. Once the earnings happen, typically the next day the stock will drop, and you say, well, why is that? Well, that's because typically options, the profit is sort of baked into the stock price. So it's a classic buy on rumor, sell on news kind of thing. So hopefully I'm right this time. I did make a little bit of money last time on options earnings. And by the way, for around options time, I do these options trades. Around earnings time, I do these options trades, and they're very profitable. And it's kind of like the gift that keeps on giving. So I typically like to do them. Anyways, this is an iron condor, and basically it's an option. It's an option strategy. It consists of two puts, one long and one short, and then two calls, one long and one short, and four different strike prices. And the strike prices are sort of above and below where you're going to expect it to go. So here's a trade that I put on today just before we started. Basically, purchased. I actually have more contracts in this, but this is one contract. And basically, what I did is I bought the 360 put. I then sold the 355 put, and that's the that is the put spread, and then with the call spread, what I did is I sold the 390 call, and then I purchased the 395 call. And when you add that all up, it's $50. So it's $50 basically to get into this trade. And by the way, I will provide a link to this on the screen so that you can actually see what I did, and it's with a little bit better resolution. So what I'm going to do is I'm going to put this right on the screen as we speak. This is how you get if you type this into your URL, this little bit.ly thing here, it's going to take you directly to the Google slide. It gives you a little bit more information that you can study. But anyways, here's how it works. Basically, here's how it works. With this, it's $50 out of the pocket, and then it could potentially yield as much as $550 if everything goes right. And basically, that's what I'm kind of expecting. I expect this prices to be bid up initially, and then when it goes through earnings, I expect it to come down a little bit. And this is my profit range in here at expiration. So if it closes below 350 a share, that's this Apple, I'll make 550. Actually, the profit starts at about 354. So I'll be in the green range there. But even if I don't quite get it right, I will still make money in this area. Now I do have a potential loss that I can make if the thing goes up exponentially after the call, and that might happen, and I could potentially lose $450. But you see, I have a potential to make more money than I'm going to lose, and also based on my prior experience with Apple, this is typically how I believe it will trade. So we'll see, and tune in on Friday to see what happened with this trade that I made. Anyways, this kind of gives you a annotated chart of how Apple is trading before earnings. As you can see, it moved down a little bit here. It's moving back up to the 21-day moving average. This is the weekly chart, by the way. And this kind of gives you buy points. The last buy point was 319. It's moved up significantly since then. Hasn't really had a chart pattern that has showed a buy point, but so I do expect it to trade up a little bit before earnings, and indeed it is trading up a little bit before earnings, and then probably it will go down a little bit because this is trending down. So in this particular trade, I will be making money if it after earnings moves a little bit to the downside. That's kind of what I do expect with Apple. By the way, taking a look at this chart, this blue line here is what they call the relative strength line, and basically, this if it's pointing up, that means that the relative strength of this issue is increasing, which it is definitely, and if it's pointing down, of course, it's the opposite of that. So that's a lot to take in, but I will give you I will put up on the screen a URL that you can just type in to see these charts in further detail. But anyways, that's that on the chart as well. So let's take a look at no audio. Okay, hopefully did I say am I and I'm muting the mic. Okay, hopefully I should have lost audio. No, Jimster. Where did you go? Okay. Hopefully I have audio out there. I'm hoping I do. Oh, you're good. Okay, thank you, man. Thank you. Sorry, sometimes I have technical issues with this, so I apologize. And by the way, I'll go through this chart again for everyone. And by the way, you can definitely look at this Iron Condor trade. Just type this in your, note this down, type it in your browser, and you'll be good to go. So. Yeah, so sorry about that. With my trade, let's pull up my charts here. Great. Okay, so thank you. Okay, I have a question on Shopify. My thoughts on the on Shopify earnings. Don't know. I do think that Shopify is going to be pretty good. So let's pull up the chart for Shopify. See how it's trading. SHOP is the symbol for Shopify. Let's bring that up right now. There we go. Okay. Very, very strong in front of earnings. I do think this probably will drop after earnings. Typically, that's the That's how it works, but it is very strong before earnings. So I want to kind of show you this chart here really quickly. We've moved up very nice. We've bounced off of the 40-day moving average. It's moving up. Lots of volume, lots of expectation on Shopify. Here's the thing. Typically with these, now it might gap up. It gapped up before earnings. I do expect this to back off a little bit after earnings, but not much. I think the trend is going to be up there. I do think they're probably going to beat on earnings, but they're usually, when it beats on earnings like this, the price action is down because so much has been put into the stock. There's bidding, quite a bit of bidding up right before the earnings at 64. It's up $64 today. If you're in the issue right now and you're getting ready, go to about an hour before the end of trading. I would sell this in the end of trading, see how it does through the earnings, and then you probably can come on the other side and pick up a very nice gain there by buying it on, this is the only way I like to buy dips. Normally I don't buy dips, but if you're pulling it through earnings, typically it will move up before the earnings call, and then after the earnings call the next day, it will move down and then it'll move up again. So this is kind of a good way to sort of get a little bit of profit here. And this is significant when you're talking about Shopify. I'm not in this issue, but it is a good stock. So thank you very much for that. All right, so let's see. Is it best to do an iron condor before earnings, or can it be done outside? Well, it could be done both, by the way. And just so that I'm going to show you an example of an iron condor that I am currently in. Let me just kind of show you that real quick so you can get an idea of, sort of how and what and why and the whole thing on that. So, okay, there we go. I have too many buttons here. All right. Yeah. So basically, what I'd like to say about that is that you can do an iron condor at any time, but I do think that going through earnings sometimes can be the best way to go, because here's the thing. You don't want to use an iron condor for everything. I typically use it for the bigger stocks. And the reason I use it for the bigger stocks is that in the bigger stocks, you have a situation where where it's going to be relatively stable. You see, that's the thing. I typically will do an iron condor before earnings. Why? Because I expect it to go down a little bit after the earnings and then move back up. I don't expect a gap up or a gap down. And that's kind of the way I like to play it. The reason I play it through earnings like this, and I don't typically like to hold the stock, is because this way I can win sort of on this price action. The stock itself doesn't have to move. I mean, doesn't have to move very much in either way, but I can win basically by this price action. Typically, the way it works when a company is going to report a good number, and I think Apple is going to promote, going to show some good numbers. Typically, it will drop after it comes through earnings, and the reason is because it's just the classic Jussie Livermore thing. It's baked into the price, so it's buy on rumor. It's the classic buy on rumor, sell on news. Now, do I think that Apple is going to drop because of this? No, I don't. I think it's going to maybe correct a little bit, and then it'll continue probably up or sideways. That's what I'm expecting. So hopefully I'm right on this. And with this trade, you can basically take advantage of that. And basically, I've laid out the trade in sort of in Google Slides here. I'm sharing out Google Slides. And just type this into your browser, and you can get a look at it and kind of see what it's doing. But basically, you're looking at a situation where you can do the iron condor. I like to do the iron condor around earnings, typically on the bigger stocks. You can do it any time. You can absolutely do it any time, but I am not a total fan of any time. I like to do, with the iron condors, I like to do it right around the earnings and a fairly quick expiration. The expiration on this trade is basically on Friday at close of business. So it's when the options expire. So I typically like to do, the reason is because you don't probably want to do an iron condor that doesn't have an action that's going to create action on the stock. And the reason is because of the what they call the decay on some of these these options. When you get close into the expiration, you have a very fast decay on the value of the options. So that's why typically with the Iron Condor, you don't really want to do it for more than about 5 or 6 days, and that's why I do it on Apple, anyways. Okay, so um, we are letting Apple expire. I think so. I'm going to. I just, as I say, I just entered the trade basically before I came on the air, and I always do. I've always done pretty well with Apple, buying the options right close into where buying the options close to the expiration. So, I last time around I did well. I made about 1,200 a contract, and this time hopefully put in about 50. Hopefully get out about 550 if the trading gods are with me. There is some risk. I mean, I definitely don't want to minimize that. But the thing about this Iron Condor is that typically you kind of get the best of both worlds. And again, I will probably go through that on slides just really quickly. Maybe a little bit later. So hey, thanks, man. Appreciate it. Appreciate it so much. Okay, your audio was cut out. Oh man, I am so sorry. Was cut out in the beginning, but it's good now. Thank you very much. It's funny. I got some new cables. I have 2 Ethernet cables in here, and I think the connection to the wall is a little bit loose. So, apologize for that. I'm kind of a one-man band here. Hopefully, I will have some interns. I have an intern now, and I'm training, but not from the technical side, just for the trading side. So hopefully I could get some help on the technical side, because it's getting interesting. All right, so what do you think happened to Tesla? Lost its volume. Why did they shut down Robinhood? Well, I can tell you why they shut down Robinhood. And I actually, if you go back in my videos, and some of them are pretty amateurish, I've come a long way in a very short time. Part of the reason that they shut down Robinhood, excuse me, is because Robinhood has had a difficulty in filling orders. Now they have a very, very good app. Robinhood is really, really great, but this is something I'd like to talk to everybody about. I don't recommend Robinhood because, as long as everything is going along fine and there's no problem, with the market, there's no huge up days or huge down days, Robinhood works great. But when it gets tough, when the institutions are selling, guess what? If you're on Robinhood, you'll get squeezed out of the deal. A few months ago, when the market was moving down, and I was telling everyone to short, people just lost money right and left on Robinhood because they couldn't execute orders. That's why I recommend TD Ameritrade. And by the way, if you go to my Action Trade Alerts and sign up, I'm going to send out a special deal on TD Ameritrade here pretty quick, so that everyone can take advantage. It's the platform I use. I mean, I'm not selling something that here. Well, I'm not selling anything actually here. It's something I use every day. So I would recommend, if you're on Robinhood, consider moving your accounts to TD Ameritrade, because TD Ameritrade has superior tools. They're a little bit harder to use, a little bit harder to learn. I agree with that, but it has superior tools, and it also has the liquidity, because Schwab and TD Ameritrade are one company now, and they have tremendous amounts of capital, and you always get filled with them. I just got filled with a bull call I just got filled with an Iron Condor using Thinkorswim, and it filled. And if I had tried to do this on Robinhood, I would have not got filled on this. I mean, I'm just straight up tell you that. So. If you sign up for the Action Trade Alerts, I will hopefully get you out a special deal on TD Ameritrade for that. So it's pretty cool. Okay. Also, what do you think happened to Tesla? Well, I think Tesla, some of the analysts, I'm in Tesla, by the way. I'm in it probably until Friday, because I do have a call option. If the stock, it's moved down a little bit. I sold a call option. I have shares in Tesla, and I did sell a call option on my Tesla shares that will expire tomorrow, but actually expire on Friday. It's a 15:30 call. And basically what I do is that I go in there and every week I sell a call, and hopefully one of these days I'll get called out. But I've been doing this for several weeks, and as the time decays, that's what they call the theta decay. I typically make money on this, but you're right. I mean, I think it's settling at about $1,500. I'm going to show you the chart right now for Tesla because I think it's an important one because it definitely is a market leader. It's number one in its group, and that's very, very important. This is the daily chart here. It's coming down a little bit here. Its relative strength is still pretty good at 99. It's not only its relative strength is phenomenal. And if you look at this, yeah, it's still trading very well. It's up a little bit today, $26. It's not normal for a stock to move like Tesla does. I mean, I'll just be honest with you. I've made a lot of money on Tesla because of the volatility, but don't expect it to move like this. I think it's going to settle, at least for a while, at about a 1350 to about a 1550 range. That's what I'm looking at based on the charts. Don't know exactly. You never can tell, but that's the range. But I still think it's a great investment, and I know that there's a lot of naysayers out there. There's a lot of people out there that are saying, hey, Tesla, it's overvalued. And that's true. I mean, the last buy point on it was $9.97. As a matter of fact, if you look back on my YouTube videos, you'll see where I called basically a buy point at about $1,000. And that's in my YouTubes. And by the way, if you want to look at my old YouTubes, I actually get a number for you. I have quite a few of them up there now because I do live stream, and hopefully I try to, update it with other stuff that's outside of that. But on YouTube, it's youtube.com/Dallas Trading Floor, and so you can see it. I have a little bit of issue. There we go. Okay, so I'm also broadcasting on TikTok. By the way, everybody that's watching on TikTok, you can't see my charts because TikTok only allows me to go live using I'm actually using an iPhone right now. But it's all my charts and everything are available on YouTube. Just go to youtube.com/Dallas Trading Floor. You can see exactly what I'm showing with the charts, like the Tesla charts and the bull call spread trade. By the way, if you're on TikTok and you want to get on my mailing list, and I just sent out a trade alert for the bull call spread not bull call spread, excuse me, Iron Condor trade that I made on Apple today. That's available by going to my bio, just hitting the link, and it takes you right to the sign up page. And of course, it's all free, so no risk on your part. All right, so let's see. What do you think happened? And I talk about thoughts on KL buy point. Very, very good question. Let me see if I can get you a decent chart and let's look at buy points for KL. KL is a stock that I definitely really, really like. It's Kirkland Lake Gold. It's a top-rated gold stock. There's been a lot of movement into the gold area because there is some concern about increasing inflation. Now, I am not one who believes that it's a good time to own physical gold. I know this sounds strange, but the gold miners are great because everybody wants to own that physical gold, and they're clamoring for the better miners. The advantage of KL is this Canadian mining firm, very, very good, is that it has very good active mines, both in Canada and in Australia. And by the way, another gold miner that was very inexpensive, I sent out a trade alert on, is B2 Gold. You might want to check that one out. BTG is the symbol on it. And it is a top-rated symbol under $10, which is a pretty hard thing to find. So let me show you the marked up chart for KL. KL is in what they call a second stage. It had a cup with handle. This is the cup. This is the handle. And then typically on a second stage, it will then cup again, and then it's moved very, very nicely. The buy point on KL is 44.33. 44.33 buy point on KL. It's a little bit extended beyond that. Right now, it's trading at 50. So if you're going to buy it now, you're going to be extended a little bit. Now, what do I mean by that? Well, when you buy above a buy point, the 44.33 buy point, you typically only buy up for about from the buy point up 5%. That's typically, and that's the William O'Neill rule. And by the way, highly recommend anything that William O'Neill does, Investor Business Daily. He is really the king of this. And, I just want to pay homage to his great, this is how I learned how to trade. Most of the best traders in the world use the IBD. And I do too. And not that saying I'm in the rarefied atmosphere with a lot of the greatest traders, but many of the greatest traders use his system. I think it's something that's very well worth while learning. And his famous book is How to Make Money in Stocks, Good Times or Bad by William O'Neill. It's available just about anywhere at Amazon. And I get it at half price books. So, why buy full price? That's here in Dallas. We have half price books and it's pretty excellent. Anyways, it is a bit extended right now. So if you were to buy KL, you've got to understand that there's going to be a little bit of volatility on it. If you buy too far above a buy point, what ends up happening is if the stock does move to the downside, it typically will be cushioned at that buy point. There'll be sort of a resistance at that buy point, allowing it to sort of bounce. So you've got to be a little bit careful when you buy extended. And it's not necessarily bad to buy extended. I think KL is an extremely good name, but you have to be concerned about it because at 44.33, the buy point is only going to go up 5% beyond that. So this would be, if you were to buy it here at 50, you would be a little bit extended, but it's still pretty good, and it may pull back a little bit to about that buy point. But it has a very good chart, and I do think it's possibly headed higher. So thank you so much for that. Thank you so much for that. That question. The question basically on the buy point on KL. 44.33 on that. So thank you for that question so much. Let's see if we have some questions from TikTok. Thanks everybody for looking here. Wow, we have a lot of people on TikTok today. This is fantastic. Stocks make no sense. Well, I don't know about that. If you learn the system, which is basically William O'Neill puts it together in How to Make Money in Stocks, a good system for good times or bad, then you can start to understand the stocks. As a matter of fact, they're relatively understandable. Most of the problems you get into when you're buying and selling stocks has to do with the fact of you're violating certain rules. The first and most important rule when you're buying stocks is if you do enter a trade, make sure that you always place the step one is to buy the stock, and then step two is to set that stop loss. Set that stop loss at 8% below what you paid for the stock. If you do that, you will even if the stock drops, you'll be sold out and you'll maintain your capital. This is very, very important. A lot of people will go in, they make a few good trades, they get things go really, really well, it goes up, and then the market goes against them, and they can't understand, well, why doesn't it just work the way it did before? Well, part of the reason is the market is always changing. So you've got to move in the direction of the market. Sometimes the market direction is up. Currently, the market direction is up, but you always have to be careful when you put an order in that you put a stop loss in, so that if it reverses on you and you're not right, and believe me, I'm wrong a lot, but I tend to reduce my losses mainly because I have a stop loss there. So that's the first thing to learn. It's kind of like when you're learning how to ice skate. You want to learn how to fall first, and this is very, very important. So when you enter a stock, always 8% down, set that stop loss, and it'll be a good thing. All right, so let's see. I have a question here. If you compare all the major tech stocks, Apple, Facebook, etc., they all have a similar price action. It's nothing to do with Tesla in particular. Absolutely, I agree with this. Thank you very much. That's a very, very, very astute thing that you said. The price action basically is in the top stocks. Typically, what happens is that you have a basing pattern, and then when the time to buy a stock is when it clears this basing pattern. The very, very best of the base patterns, of course, is the cup and handle. And I want to show you a classic cup and handle on a stock called Kirkland Lake Gold, KL. And this is the cup with handle. And this is absolutely the right length of time. It has to be quite a long time. Actually, this cup has to be pretty much, at least in the first stage, it has to be at least 10 weeks wide, and it definitely is. And then so it moves like a cup, as you can see, and then it kind of retreats here a little bit. It gets kind of stuck here. It moves back down, and then as it's moving back down, that's when it typically will form up. Now, sometimes you get a cup with handle, and then you get another cup, and that's definitely the case here with Kirkland Lakes. But as you can see, as it comes out here, this is when it moves up, and it moves up very, very strongly. Now, why is the buy point at this level? Well, the buy point is this level is because this is something that you always want to do when you're looking at stocks. You want to buy strong stocks on higher highs, and that's definitely the case here. It has achieved this level once again here. So this is the buy point. That's why there basically the weak hands and the strong hands of the holders of this stock are kind of fighting it out. And then if the weak hands are going to be taken out, people aren't going to want to sell, and then it goes higher. Now, let me just say something about the big stocks. In the big stocks, retail investors do not, I repeat, do not control the price of the stock. It's controlled by the institutions. It's the institutional buys that really move a stock up or down. As retail investors, we don't have enough buying power to move a stock up or down. So what we have to do is we have to look to see where the institutions are moving into the stock and who's selling out of the stock. That's what they call the weak hands and the strong hands. The weak hands typically are the traders, people like me. They will be in a stock as long as it's working, and then when it's not working, they will sell it. The strong hands typically are more institutional, and they will hold it for a longer period of time. And typically those are people like the mutual funds or the insurance companies or companies like that hold large amounts that are less susceptible to the price fluctuations. That is true definitely in Tesla. You still have many of the institutional holders that have held it since the IPO. So that's part of the reason why Tesla can move so quickly, is because it's volatile. There's not that many shares relative to the size of the company, and many of the institutional holders are still in there. So that's what the strong and the weak hands are. Anyways, this is a classic cup with handle pattern, and I wanted to show it to you just so that you can see it. And typically I try to put these on my show with annotated charts so that you can see it. Okay, hold. This is a question. This is a good question, Nathaniel. On PayPal, hold it into earnings. Here's the thing about holding into the earnings. I don't particularly like to hold stocks into earnings, because typically what happens, even on the very best stock, is that you get this interesting price action. Typically how it works is a stock will initially move up into earnings. And then once it's hit earnings, then it will back off. And you say, why? They had a great quarter. It was excellent. Well, typically the price is baked in. The price is a price expectation, and that is what's built in to the price. So typically what will happen is, even a very, very good stock, a stock will run up right before the earnings. Then once the earnings are right before the earnings are announced, everyone will sell, and then the stock will drop, even though they report good earnings. So I would not hold PayPal into earnings. Let's take a quick look at the PayPal chart so I can kind of give you a kind of an idea on that. Here we go. Basically, we had a breakout. Yeah, and it's still trading above the 21-day line. That's this little green line here that I'm kind of, if you can see my cursor on it. By the way, if you're on TikTok, I'm broadcasting this on YouTube at youtube.com/DallasTradingFloor, so you can see all my charts. But anyways, it's very, very strong into earnings. I do think, yeah, it's up after hours. Well, did it report today? Well, if it did, then maybe I don't know, but I think that they report tomorrow. I believe that they report tomorrow. Let's look when they. Yeah. Oh no, they reported. Okay, so it's up after earnings. Well, that's good. If you did hold it in earnings, you did well. But typically, the usual thing is when in the earnings, they typically will drop the next day after earnings. But it appears to be up after hours, so the volume is up too. So this is very strong. This is a very, very strong. So, oh, it's after hour. Yeah. Okay. No, after hours is up too. So there you go. I sometimes don't get it right. That's for sure. I hope you did hold it in there. She probably made a little bit of money. Okay. So I own MGM at 1950. I want to do income. What to do income on sell calls? Your thoughts? Well, MGM is not terrific. I don't, the gambling stocks I am not a total fan of just because of I don't like this chart at all. Let me show you the chart on MGM. Okay. And I hope I'm not stepping on any toes here. But I do believe that this chart is a downward trending chart, by the way. And we do have some very strong selling action. This is probably going to be heading lower. Oh, it is. There we go. No, it's up today. But this is going to be heading a little bit lower. So I don't know if you can get as much on the calls with a better chart. I just wouldn't be in MGM Resorts right now. And the reason is the COVID-19 thing. It's a great company. But if nobody's traveling there, I don't think you really want to do it. You can definitely make a little bit of money by selling calls. I use that strategy all the time. I always typically will go into a stock and then I'll sell calls against it. So I do like that strategy tremendously. But I don't know if you want to be in MGM. I just don't think right now the chart is trending down, and it probably is going to go lower. So I don't know. Thanks, June. I so appreciate it. I'm not trying to pick on you at all, but I probably would not be in it. Types thoughts on LTE light. Okay, let's see if I can take a look at light. LITE. See if we've got. And this is Lululemon. Wow, I have not been trading Lululemon. This is one of the hottest stocks out there. Is that right? Did I get that right? I thought it's Lulu. Okay, I got the wrong chart there. I was gonna say, wow, it's light. Okay, no, it's Lulu. Sorry about that. LU. All right. Lululemon. Yeah. Okay. Wow. Look at that. Jeez. It's right above a buy point. Hey, it's pretty good. It's a pretty good chart. Let's take a look at it. Pretty darn good chart. I mean, you've got a cup here without handle, but it's moving higher. It just moved past a buy point. The buy range is basically up to 341. Wow. This is looking strong. I think you got a winner there if you can buy a few shares for me, please. I don't know why Lululemon is so on fire, but it's got a cup with handle, then it went up, and then it's got another cup. So it's in a second stage base, but it's just I don't get it with Lululemon. I don't understand why it's so popular, but it is. And it is a very good chart. So I mean, definitely, I really like it. I really like it. I don't know anything about what they sell, to be honest, but my girlfriend seems to like Lululemon stuff. But she does have some nice yoga pants. So I guess this yoga pants are a big deal. I just can't understand it. But then again, I'm a guy, so what do you know? Okay, so whether you're a long-term investor or a swing trader, would you recommend to sell? Oh, always. This is a very, very, very good question. Thank you and you obviously have probably been seeing some of my videos on TikTok, which I put on. Here's the thing with a 8% loss rule is the reason that you always want to do that is because you want to maintain your capital. Jesse Livermore, over 60 years ago, figured this out, and he was one of the greatest traders of all time. If you don't know who I'm talking about, just Google his name, Jesse Livermore, and you will find a guy. This is the first billionaire who made basically $1 billion without owning a company, and he was a speculator. And his name is Jesse Livermore. And by the way, The Great Gatsby, I think, was based on his life. Anyways, you should look at him because he came up with this idea. If you let your losses run more than about 8%, it's next to impossible ever to come back to zero. So that's the impetus for the 8% rule. That's why you always want to do the 8% rule. Now, the 20% rule, which is taking your profits rule, that's more open to interpretation, because sometimes you'll be in a stock and it'll just move up, it'll just gap up, And in less than 3 weeks, it's up over 80%. If it in less than 3 weeks, if the stock is up over 80%, you want to hold that thing because it may be going higher. Now, if it isn't, you want to start taking your profits at about 20 to 25%. Why? Because typically this is the length of a run off of a quality base, like a cup and handle or a cup or 3-week tide or whatever your base pattern is. So that's the reason for the 8% rule and the 20% rule. Just remember, the 8% rule is to save you from your losses. The 20% rule is to make sure that you get all the benefit of the stock that is moved up. And thank you so much for that. That's a great question. And by the way, it's really the 20% profit, 20 to 25% profit rule. And always remember, if it goes up more, if your stock, and this is great, if this is happening to you, awesome. If your stock goes up more than 20 to 25% in less than 3 weeks, hold it. Don't sell it. But if it's over about 3 weeks, then you want to consider taking profit. Now, how do you take profit? Well, typically what I like to do is I like to sell half of my position. Why? Because I can use the capital for something else that's going to pop up, hopefully, if I find it right. But I also in the stock so that if it moves up even higher, I'm in there. So I like to use the 50%. It's just really easy to do. So that's how I like to do it. Qorvo, hey, thanks for Stock Talk. Let's look at Qorvo. Let's look at the chart on Qorvo. And by the way, I am in Qorvo currently. Hopefully I won't regret it. But Qorvo is a very interesting 5G stock because what it does is that they make the RF chips that are going to go into the brand new Apple iPhone. And the new iPhone is going to come out basically on the 21st of September. It's just Apple's like that. They always were 21st, 22nd. And this is going to be the 5G iPhone. And probably I'm going to have to go out and buy one. I really don't want to, but I'm sure it'll be great, as many Apple products are when they come out. So this is the chart on Qorvo. Basically, the buy point on this one was 108. It is currently at 115, and it's up $2, and it's up $2.02 today. I do think it's going to, and the volume is up. So this is very, very bullish. Also, you'll notice that the volume spike here is above the average, and this is really, really good. When this happens, when you see this thing happen, that means in the short term, we're looking for it to go higher. So I'm pretty confident that this one will be very, very good. Qorvo will be good. And the reason is because of this chart. We have a very nice buy point here, and then we've moved higher than that buy point. It is slightly below the 21-day moving average, but I do suspect it's going to go above that. And the reason I do is because of this volume bar down here. You have a very nice spike of volume. And you can see the volume is up 24%. Also, the price is up to about 115. Now, where is it going to top out? I'm looking, hopefully, to see it regain about the 120, 121 range. And hopefully that will be the case. If that's the case, I will probably be a seller. Why? Because I'm probably going to be in it for the 25% rule. This is a classic example of the 20% rule. We go from about 108 here, 106. Is that right? Yeah, 108.88. I'm sorry, that's the buy point. And then we're multiplying that times about 20%, giving us where we want to get out, okay? And that's going to be above this 120 line. So I'm probably going to be in the stock, hopefully, until it achieves this 120 line. Then once it goes up to about 122, I'm going to be looking to sell. And the reason I am is because that follows the 20% rule. That's kind of a really good example of it. Now, will I hold my whole position? I don't know. I'd probably sell half the position. I might sell it all. Just depends if there's any better opportunities out there. So it's always about opportunities. What do you think of BTG September? Okay. That makes sense. That's interesting. I have to get back to you. Is this is BTG? I think BTG is that Big Five. Is that Big Five? No. I want to see. Let me see what BTG. I don't remember what BTG is. You know, I should know this. Oh, B2 Gold. Yeah. Okay. On this one. Oh, that's sorry. This is what I recommended yesterday, and I do think this is good. It's down a little bit, but the volume is up. I wouldn't go on. I don't know. With a stock like this so cheap, I don't think you really want to be in the options here. I think you just want to be in the physical stock. I think you just want to be in the physical stock. It's off a little bit today, but this is a very nice chart pattern. As you can see, the 21 days moved above the 40 day. It's above the 200 day. We had some very nice price action a few days ago. I think this one's going higher. I do. I do. But I don't think you need to be in the. I don't think you necessarily need to be in the option on this one. You could do it if you like, because I mean 5 cents is 5 cents. You could do 100 contracts easily on that. But on the problem on this is essentially a penny stock, and I do put it on there because I like penny stocks too. That's how I got into trading initially. Was my grandfather was big in these penny stocks, and when he died, we ended up with. And it's not funny that he died. I loved it, great man. But when he passed away in his estate, we ended up with all these penny stocks for these gold mines in Utah and various places like that. So I've always been interested in it, and that's kind of what got me into stock trading in the first place. Are these mining stocks, and they typically are very cheap, unless they have some real production like KL. But this one is very good. This is actually, they actually have gold mines in all places, Nicaragua and the Philippines, and they're doing quite well. It's the price of, it's a Canadian firm. It's the price of gold goes up. This one should do quite well. It's pretty much very cheap. It's $6.97. It's not really quote unquote. And this isn't really investment grade, I would say. This is more kind of your fun stocks, and that's kind of how it is. Okay. What are your favorite chart patterns aside from cup and handle? I know I keep going on and on and on and on and on, and on about cup and handle. You know what? I like what they call 3-week tight. I also like. I also really like the double bottom. I don't know if you've seen that one. I'm going to do some double bottom is very powerful as a pattern. The double bottom. That's when it bottoms and it goes up. Obviously, double bottom, right? And then it comes back down. And then typically on that second, when it bottoms for the second time and then it comes up to the level of the kind of the middle of the W, and I'll show you that one. Well, not on this. I'm on my TikTok videos. Then I like to buy it. I like the double bottom. That's probably my second favorite chart. Is the double bottom. Thank you so much for that. Thank you so much for that. I appreciate it. Comments on NTRCN. Okay, this is a Canadian stock. I don't know if I can pull this one up, but let me see if I can. Let me see if I can get a chart on this one. It is. There we go. Okay. NTARCN. Well, that's like a mining stock to me. NTAR.CN. Let me see if I can pull a chart for it on. If it will pull a chart on it. I don't know if I can on this on my system. You know, I don't think it will, but let me see if I can pull a chart on this. Yeah, I don't think I have this one, unfortunately. I don't think I have this one. Let me see if I go to another system. There we go. Right. It's INTR.CN, right? Is that right? Yeah. ITAR. I'm sorry. It's NTAR.CN. You can see spelling wasn't one of my fortes in college, or even I have no results for that. I have no results for that. Sorry about that. I tell you what, if you want to, I can definitely take a look at it. It's easy to send me a comment. Just go to my website, DallasTradingFloor.com, and then type in the comments, and I'll definitely get to it. And that's basically this is www.DallasTradingFloor, and then just go to ask a question, click on over there, put the information in there, and I'll try to answer it as quick as I can. So I can't pull that one up. It sounds like it's a Canadian stock that is a penny stock. So don't know about that one. All right. So let me take. Does Kodak mean we're going to war with China? Well, I don't think we're going to war with China, but I think that there's going to be some changes in the. I think there's going to be some changes in the makeup of a lot of things with the supply chain, and I definitely think that's going to heat up. So, how can we say what's going to happen? I just don't know. I just don't know. But Kodak has done well. Now it used to be a Dow component until it went bankrupt, and why? Because even though they invented digital photography, can you believe this? They invented digital photography. Um, they got pulled down by the photo business. I used to be a photo hobbyist, and I used to love the Kodak stuff. It was just the best made stuff ever. But I'm afraid they were kind of the victim of their own quality. It was just the best quality, and I don't know. It's just digital photography just happened, and sometimes, and this is by the way, this is repeating in the automobile business. Kodak dominated the photo business for almost 100 years. All right, well, maybe about 100 years, I guess, and nobody could catch them. Nobody could do it. And then they invented digital photography back in the 70s, if you can believe that. Well, even though they knew that digital photography was going to be the future, because they had so much infrastructure in the chemical photography business, they couldn't get out of the way. And eventually it died and it killed the company. And this is, I'm afraid, what might happen to General Motors. Even though General Motors was the first company to really have a good electric car, the EV1, I think they basically could go down. Again, they went bankrupt once. And this is because with Tesla, you have essentially the future. You're seeing the future of the automobile business, and everybody's trying to catch up. Now, there's a lot of great manufacturers out there, but in terms of making a car is one thing. The software to run it is another thing. And I think Tesla is way up front. And that's the reason why I don't think you should discount Tesla, even though a lot of analysts are on CNBC and other places are saying, oh, it's overvalued and it's going to be terrible. Well, I don't think they're right. I think they're going to have their hat handed to them, because I do think that long term Tesla is a really great investment. Now, here's the thing: I think it's going to stick around this 1350 to 1500 and 1550 range for a while, because we're still not ready. We're still not seeing enough movement upwards. So that's just my take on it. Okay. Apple, what do you think? Well, I'm hoping that we will see a little bit, because I did just put in the bear call spread on Apple. So let's take a look at the leaderboard chart for Apple and see if I can get a good annotated chart. I do think it's going to run up before earnings. Oh, it's running up. Yeah, it's running up. And we should see the earnings call, I believe, tomorrow. So let me show. It seems like, yeah. It seems like it's running up before earnings. The earnings call will be tomorrow. Most of the big announcements are always on Thursday. So the earnings call is going to be tomorrow. And of course, I have the bull call spread on this one. And for everybody out there that's interested in this, I do put it out on the trade alerts, but I have a link here. I'm going to put this up on the screen so you can see the iron condor trade that I made just before going on the air. And you can if you could just take this little URL, bit.ly/, and this and post it into your browser, and you'll go right to the Google Slides and explain exactly the trade, sort of how it sets up and all that. And I did go over this trade. Now, unfortunately, this one ends basically on Friday. It's a very short trade window. It's just basically around earnings. But I do expect that we will see a little bit of volatility in Apple. I think it will move up a little bit through the or right to earnings, and then I think we're going to see it probably pull back a little bit, and then I think it'll probably stabilize. So I don't think it's going to move too far out of a range, and that's the reason for this trade. And if you want to see my logic on it, go to bit.ly.com and then that little URL after that, and they'll give you kind of an idea of of the trade there, and so you can see it more easily. Okay, what are your feelings on Uber? Good question. Uber, the problem I have a little problem with Uber. I think it's one of those companies. I think what we're seeing, and this is kind of my Tesla, my Tesla sort of rules the world thesis. Not that it really rules the world, but my thesis on how things can get obsoleted really quickly. There was a company called Netflix. I'm sure you've heard of it. I certainly have, and I have a subscription to it. Do you know, originally when they started out, they just sent out CDs. It wasn't online, it wasn't streaming or anything like that. And I kind of think that's where Uber is. I think that they're sort of, they have a great program for people that can drive for Uber. It's a job you could just turn on and off and all that stuff. And it runs in an app and it's really wonderful. But you know what? If Tesla comes out with a self-driving car, people that drive for Uber are so screwed. It's not funny. And that's, I shouldn't say that, but I think they are. And if that's true, then you can see them go way, way down. Uber does not have a good chart, and I want to show it to you. Now, I shouldn't be ragging on Uber because Uber moved like 2,000 programmers here to Dallas in Deep Ellum in a building practically right next to the one I used to work out of. But it's an okay chart. This is an okay chart, but as you can see, it's settling around this 200-day moving average. And unfortunately, I think it's going to move down. Now, will it seek support at this 200-day level? It is. It's seeking support there. So as long as it doesn't go too much below this. But here's what I don't like about this chart. The relative strength on it is only a 31. It's only a 31. Now, a lot of people know about Uber because they drive for Uber, but I don't think that long term it's probably a good investment. And I don't think I think a lot of the money on Uber has already been made. I think it was made really up until about the January timeframe, sort of coming out of this trough here. I think it was made. I think it's on the way down, and I wouldn't be in the stock. Well, it's been an hour, and thank you so very much for everybody. Just wanted to put up my trade alerts here. These are totally free, by the way. Action trade alerts, and I typically will do them. Hopefully, I have 2 or 3 a week, maybe more. And also, if it has some things on it that might be of interest to you, I try to get them out as soon as possible. Don't check my spelling too hard because I just type as fast as I can. I'm getting more. I have an intern now, and things are getting a little bit less hectic. But sometimes before air, I just run around like my head with chicken, my head cut off, so my hair's on fire, kind of. So, well, what's left of my hair is on fire. Anyways, if you want, go to DallasTradingFloor.com. Just sign up; it's all free, and be on the mailing list. And I will see you tomorrow. I have one last comment. Okay, thank you. Oh, thank you, thank you very much too, and thanks for being on Twitch too. I'm getting bigger on Twitch. As they used to say, I'm trying to get big in Japan. So, I don't know if you know what that was, but thanks for watching me on Twitch. Love Twitch as a platform, and I will see you tomorrow at 2:30 Central. Thanks again for everybody. Keep trading. Keep your spirits up. There's lots of money to be made out there, and see you tomorrow.